Hello traders, the title of the video is how to avoid the bearish engulfment candlestick pattern trading mistakes. Let's get started. I'm on the quarterly chart of Activision Blizzard Incorporation. The epic is Alpha Tango Victor India, ATVI. This is an American stock that belongs to the technology sector. Electronic, gaming, and multimedia. Activision Blizzard Incorporation. I'm on the quarterly chart. All right. So talking about the bearish engulfment, trading mistakes. All right. Candlestick pattern. Traders love the bearish engulfment candlestick pattern. It's a powerful bearish candlestick pattern. And there is one here. You can see that there was this bullish candlestick bar here, and followed by this bearish candlestick bar. Okay, so all the gain here in this bullish candlestick bar was erased by this bearish candlestick bar. So all gains were gone after this bearish candlestick bar. This is a bearish engulfment. So first we have the bullish candlestick bar, all right, in place. Now so for 3 months this candlestick bar was going up, and then the following candlestick bar normally it should continue to go up if the stock is still bullish. All right, should continue to display new higher lows, higher high. All right, but for us, anytime we look at the candlestick bar, especially the bullish candlestick bar, you want to draw the median line. Okay, so because the median line is a psychological price level which is dividing the candlestick bar into 2 zones: the bullish zone above and the bearish zone below. So even if the second candlestick bar is going to be bearish, we don't want it to go below the median line of the previous bullish candlestick bar. Even if it went below it, we want it to have, at the end of the day, to close above it. So which means if we go below it, we would prefer it to have a tail or something like this. I'm putting my tail there. Oops, it's not allowing me to put it there. You understand? We want it to have a tail like this. So we know that, okay, though it went below the median line of the prior candlestick bar, it closed, okay, above the median line. So we will say that, okay, there is a high chance that it will continue to go up. But if that bearish candlestick bar closed below that median line, the median line of that bullish candlestick bar, we will talk about, okay, the bearish engulfment. Now, again, when we are talking about the bearish engulfment candlestick pattern, it's always about the location where does that pattern form, at a resistance level, at a price target level, okay, price target level, at a hidden support, hidden resistance level, Fibonacci extension level, at a key level. All right. So those are the locations for that bearish engulfment. But sometimes traders made mistakes. This is one example here. You see here we have a bearish engulfment. I don't want to remove my line, I'll leave them there. Okay. Stay with me, please. You see here, this is a bearish engulfment. Not only that, it closed beyond the median line, even below the low of this bullish candlestick bar. So if I even went to this zone, it's a very, very bearish engulfment. All right, price was going up first, which is very important, must be going up first. All right, and now if you apply Fibonacci extension to this session, you see that we are in this session here. So went up from here to here, pull back, apply Fibonacci extension. We are in the zone of 200% zone. All right, in fact, it's a 261 because if I adjust my line, you'll see that it's in a zone of a 261% Fibonacci extension level. All right, I'm going to change this one quickly so you can see it on my chart. Bear with me, I'm getting there. 261 1.8%. All right. That's it. Here it is here. See that zone 261.8%. Exactly. You see here 261.8% Fibonacci extension level. It's a hidden resistance level. So the place of that bearish engulfment is a resistance, hidden resistance level, or the place of the pattern. But why suddenly we have this tall candlestick bar here? Why is it so tall? There's a story attached to this tall candlestick bar, and that story is relating to the bearish engulfment trading mistakes. So a lot of traders that just sold this stock because of the bearish engulfment, okay, were taken out. So their stop loss was the fuel that created, okay, the volatility for this long range bullish candlestick bar. So they are taking out a lot of bearish engulfment candlestick traders were taken out of their bearish trade. Probably some of them are position trade. You can see that they tried to sell it here before. Okay, I will call that zone in a zone of a 214% Fibonacci extension level. So some people are tempted to sell it. Probably went down a bit, but it got a tail. The tail is a support level. This candlestick bar also closes above the median line, its own median line. So if you draw the median line for this candlestick bar, you see that the closing price is above it. It with this, though it closes below the opening price, it's a very bullish candlestick bar, a long tail, and closes above. All right, the median line, and then people bought it. Now, how did they buy? They buy by using a top-down trading method. So to avoid, so though we have a beautiful, gorgeous bearish engulfment candlestick pattern at the 261.8% Fibonacci extension level, the reason why a lot of traders did lose here is because they just didn't apply, okay, a top-down trading method, a different time frame trading method, or very simple, they did not care about controlling the risk, or they did not wait for confirmation. So I'm on the quarterly chart. Let's go quickly to investigate what has happened here. Or I'm going to the weekly chart. You'll see soon that there was no signal to sell. Right? So where were we? Let me put it. We are in this zone here, so you can see here on the weekly chart. So price is still above the rising channel nicely. Can you see that? Still above the rising channel, the rising trend line. Getting hungry now in London. Dinner time, you know, all right? Here we are. So if you pay attention to the blue channel, those who saw it here was not making a wrong decision. I hope they come out here, those position traders. In fact, you see, this is what we are talking about. The third time is mine. So this is the first time it was on to that trend line. You see, this is the second time it's near that trend line. Now this is the best time. The third time is retesting it. So that's when I say this one is mine. All right. So now for the third time, the price retesting, color it now into red, that trend line. Now we can implement a top-down trading method. So you may say to me, George, I don't want to use the quarterly chart. So here it is. It's a bearish trading setup here now. So retesting. So do you know this setup? By retesting a bullish trend line for the third time. 1, 2, 3. Third time, we give it a chance. We can look for an opportunity to sell here. Now, from the weekly chart, going to the 2-hour time frame. Is there any signal here on the 2-hour time frame? So far, all I can say, okay, yes, there is a signal. Here it is. Today, you see. So you see break below this one is retesting here. This is your signal now on the 2-hour time frame. Now you will go. So we are talking about weekly chart, 2-hour time frame or 4-hour time frame for the signal, and then 15-minute time frame for the entry. All right. So 15-minute time frame for the entry. Well, draw your channel. Right? Now the reason why I'm laughing is that some trader may think that joy is becoming a bit complex for me. All right, if you want to sell it, just sell it and go. But no, you want to control the risk. So the reason why a lot of bearish engulfment traders have lost or are losing is because they are not using a top-down trading method. The bearish engulfment is a trading setup that will generate a bearish signal. But if we have a bearish, all right, this is the inverse signal. The opposite signal of a bearish engulfment is a bullish signal, isn't it? So if we have, for instance, we have a bearish engulfment candlestick pattern, but instead we have a bullish signal, that's a reversal signal, isn't it? So it's telling us don't sell, it's going to go up, and there is a high time you go up very fast because a lot of people are expecting it to go down, but here we are, surprise, surprise, it's not going down. All right? This is the story, okay? So very simple to avoid, any candlestick pattern mistake, or to avoid especially the bearish, because the bearish engulfment is quite a beautiful candlestick pattern. Trader love it, okay? So you see now at 261.8, we see a beautiful bearish engulfment, right? It's a nice place, isn't it? So candlestick pattern traders love that, okay? So, but they will try to sell it. They will go and buy a put option, all right? They will try to sell one way or another because they think that, well, the bullish traders are struggling. That's why we have this, all right? Now look at the following candle, just went up. Just, boom, just went up. Okay? Just went up, okay? Can you see that? But it looks to me that the price now at 314% Fibonacci extension level. Personally, this bearish engulfment, though it was in place, all right, you can see that the price was retesting the blue trend line that I've drawn on the weekly chart. You see that? See? So though we have a bearish engulfment, it was at the wrong place to sell. So what traders should have done here to avoid the bearish engulfment, because you see that this kind of symbol was retesting that bullish trend line on the weekly chart. Let's go back again to the weekly chart so you can see. So what was happening, see, that's the trend line here, you see. So bearish engulfment candlestick bar retesting a bullish trend line. So people who were selling here made a bad mistake, very bad mistake, all right? So the pattern was completed on the edge of a bullish trend line. So people were selling at the wrong place. So the best scenario will be to say, all right, either we can look for it to rally up to the median line, okay, to go back up, retest the median line, and to find a resistance near the median line, and then we sell it down. Or we would prefer it to come all the way to the top one more time, and then we challenge it from there. But look at this candlestick, by how it pierced through the median line. It just kicked all the people that were selling, their stop loss were filled. They were taken out. That's why you have this long, it's a weekly chart, a long weekly candlestick bar. They were taken out because they were selling at the support level. All right? Or the best scenario, we'll prefer it to come also, rally up to the median line. All right? Look at this. To avoid that bearish engulfment. So we may say, all right, because we are at the support level, all right, we don't want to sell it here. We have a bearish engulfment, but hold on, please, my friend. I would prefer, to come out of that channel first. Okay? So if it's coming out of that bearish channel, we want it to retest it, confirming that support level as a resistance level, break below the rising channel, and then there we take it down. So, as I've been saying before, the price is the #1 indicator. though we have a bearish engulfment, which is a trading setup, all I will say to trader, any trading setup must be confirmed by a valid signal. So you may have a trading setup, a bearish trading setup, or bearish engulfment, but that bearish engulfment needs to be confirmed by a bearish signal, valid bearish signal. Otherwise, we will not buy it. So all you can see the price just turn around again and just run away. Okay, so in fact, people were selling at the wrong place, which is a bullish trend line. If somebody was trying to sell near the resistance level, which is the median line, that would make more sense, yes or no? See? But okay, now it's here. That's another resistance level, which we third time is another setup, price action setup. We test a bullish trend line for the third time. People will try to sell it. Right? So now you see why the price ran fast, because people were taken out of their trade. So the setup was at a resistance level, but at the time people were buying, they timed it wrongly. So use different time frame to time the market and to control the risk. Okay, I think you get the message now. All right. So this is the end of the tutorial about how to avoid the bearish engulfment candlestick pattern trading mistake. In order to avoid the bearish engulfment candlestick pattern trading mistake, one must use different time frame to control the risk. The bearish engulfment candlestick pattern is a trading setup. That trading setup must be confirmed by a valid bearish trading signal. If there is no signal, one cannot enter the trade. But if you have a bearish setup, but you have instead a bullish trading setup, there's a high chance the price will go up very fast. All right? Because those who are selling anywhere, anyhow, their profit, their stop loss will be taken out, and the price will run fast. And this is the situation here on the quarterly chart. The price is running fast. All right. By using different time frame, also you will see what is happening. You see now that we're going to the weekly chart, it was clear to us that there is a trend line, okay, where that candlestick bar was closing. So in fact, the bullish trader just bought it again one more time, pushing it up. Okay. If you have any question or suggestion, all right, feel free to put in the comment section. In due course, I will be recording another video to answer your specific question. If you like the video, please give us the thumbs up. If you think this is another blah blah blah, all right, let us know by giving us the thumb down. All right. If you think this amazing video or an essential video, feel free to share it on Google+, on Twitter, and also on Facebook. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Thank you for watching. Speak to you soon.